everybody. I just want to welcome you to our webinar today. I know that people are still filing in and joining the room from all across Canada, so just wanted to send a big welcome. You might notice that I am not Sam LeBrad. My name is Kristina. Today to fill in for Sam, I won't be able to quite fill her. Addie from the Capacity Building Institute to come in and share a welcome.
Hi, let me just share my screen. Are you guys able to see that okay?
Yeah, you're good.
So hello everyone, my name is Addie Raditi and I am the Outreach and Engagement Coordinator at Capacity Building Institute. So CBI is a nonprofit organization under an umbrella of sustainable capacity solutions that provides training, coaching, and mentorship to support staff and volunteers in the international nonprofit sector across Canada. So our mission is to provide equal opportunity and access to capacity building training for every small shop nonprofit across Canada and help environmental leaders across the country. And we do this through 6 core themes. So we have the financial management, fund development, governance and board development, volunteer engagement, human resources, communications and outreach, risk management and legal issues, and then lastly, leadership and organizational culture. So these 6 themes are present throughout the number of programs that we offer. So we're currently offering these programs. So the Capacity Building Webinar Series, which is where you are today. In this series, we have webinars and a number of different leaders and speakers in the nonprofit sector that come in to talk about a variety of different topics. Our next webinar will be on March 18th. So we hope to see you there. And then our other program, our flagship program is the Capacity Building Certificate Program, which we just wrapped up for the last year. And then we have the Youth Intern Training Program, which is actually what I'm part of for CBI as well. So the Youth Intern Training Program helps youth develop skills and train them. It's perfect for early career professionals who are just looking to get into the sector and learn more about it. Our winter applications are just closing now, but if you think that you'd like a volunteer or an intern for your organizations, you can scan that code and apply. We still have a few more spots available for Atlantic and Northern organizations in Canada. So like I said, I'm currently partaking in this program. So if you're a nonprofit, this is a great opportunity to not only bridge the gap between your capacity, but also allow youth like myself to gain experience in the sector. And we have a number of amazing coaches that are part of this training. So we have Sam, who normally hosts our webinars, but she's been working in the sector for 30+ years. And then we have Rob Barnes, who's also been working in the sector for 10 years. Barb King, who has 20+ years of extensive management. And then Alex, who's worked with a number of different nonprofits to work on their communication strategies. And she'll also be coming to speak to you guys in April. And then we have Dwayne Taylor, who's helped nonprofits across Canada with different DEI initiatives, and he was our speaker for our last webinar. So if you haven't watched that yet, you can watch it on our YouTube channel. Lastly, thank you to all our supporters and funders, because we would not be able to do any of our programs without them. We currently support over 150 different organizations across Canada, and all that work would simply not be possible without our supporters. So a big thank you to them. And if you have any other follow-up questions, you can feel free to reach out to Hannah or I. Our email is on the slide here, or you can book an appointment to meet with Hannah on our website. We have more webinars lined up, including the Navigating Funder Types and New Granting Rules for Charities webinar in March with Daniel, and then the Communicating with Volunteers webinar with Alex Keegan in April. So you can register for these webinars on the link below. And then if you want reminders for our webinars, other community events, you can subscribe to our monthly newsletter by scanning the QR code. And I'm going to pass it back to Kristina for the rest of the webinar.
Thank you so much, Addie. And sorry for folks that my my internet seems a bit patchy here. Hopefully it'll work for the remainder of the webinar. I'm calling in from Briar Island, Nova Scotia. So it is a remote island and we've had quite a lot of storms lately. So if it does cut out again, Hannah is going to step in and help out with the hosting duties. But let's hope it works out. I've been involved in the Capacity Building Institute since it started, have participated and attended many of these webinars, both hosting as well as speaking. And I'm thrilled today to introduce my colleague, Erik Pervin, with Greenbooks, who's going to talk to us today about understanding financials and think about finances, which is such an important topic for nonprofits and one of the major concerns of organizations that I see all the time. So hello, Erik, welcome. I think I've known Erik for over 10 years, and he was originally working here in Ottawa in nonprofits when we met. He's now on the other side of the country in BC, and I'm on the other side of the country in Nova Scotia. So you're going to get a cross-Canada tour of finances today. So with that, I'll pass it over to Erik to kick things off with a presentation.
Thanks, Kristina. Yeah, so I'm excited to be here today. I will be sharing my screen in a moment. I just thought I would open up with a couple introductory remarks. Thanks again, Kristina, for the introduction. My name is Erik Pervin. My pronouns are he, him, and I live, work, and play in the Central Okanagan, which is the traditional unceded territory of the Okanagan Silks people. I was a founding board member of Greenbooks. Greenbooks is a small shop, social enterprise. We're a nonprofit, and we help support other nonprofits. We'll drop some links later on if you're interested in learning more about what we do. Today, I'm very excited to talk to you about understanding financial statements. Now, please do bear with me. Some of this material might be a little bit basic, but the intent behind my short presentation is to give everybody a common language, shared vocabulary, make sure we're all on the same page. And then what I think the sort of meat of the presentation, if you will involve a conversation with Kristina and I and some questions from you all. So I promise the slides will be brief, but I do think it's a great way to just get us all started. So stand by and I will share my screen. All right. So understanding financial statements for nonprofit staff and board members. So this might seem like a silly question, but why bother? I mean, it's obviously important. I think the fact that you're here means that you recognize the value of being able to understand financial statements. But a lot of board members sometimes either struggle with it or are uncomfortable with it. And some of these barriers interfere with our eagerness to participate in some of these conversations. You know, we all want to get an accountant on the board, right? So they can handle that. They can be the treasurer, those kinds of things. But it really is something that everybody needs to be a part of. So I have put up a short comment here, which is that board members have a fiduciary duty. This is probably something you all know. I won't read it out, but it means that even though you might not be the accountant or the treasurer, you do still have a responsibility to understand what's going on at the organization. And then for the staff, it helps you to be able to read your own financial statements to communicate to the board what's going on, what's important. So why bother? I'm going to get into that a little bit more, but there's lots of good reasons. So a couple good reasons. Why do we read financial statements? Well, one, we want to ensure that they're accurate. I think that is sort of self-explanatory, but it's very possible that they're not, so we do need to have that oversight to review them. But maybe more importantly, it also helps us make decisions about the future in order to know whether or not we can hire that staff person or take on that project or even get that new grant. You need to be able to read your statements to understand where you are today so you can plan for tomorrow. I also like to say that good bookkeeping and good financial statements are good human resources policy. So again, we can talk about the staff side of it later in the Q&A. And please, if you have questions already, do use that Q&A feature. You can drop in the questions. But I think being able to understand your financial position allows you to be a better manager, a better board, improve retention, and give employees, if you have any, a better experience. Third reason, well, ensure compliance. You have legal obligations, CRA requires things of you. So of course, being able to read the statements helps you ensure that you are compliant. And then lastly, this is something that I think nonprofits increasingly are concerned about, but we want to be able to determine our financial health. We want to be able to know, how well are we doing? Some groups are sort of content to just keep it small, keep it local, grassroots, and I think that that's a beautiful part of the nonprofit sector. You don't have to keep growing, right? Our goal is to serve our mission. But at the same time, in order to do right by our donors and by our community, we need to continue to exist in the future. So our financial health isn't just about how do we grow, but it's also just about how do we make sure that we're still around in 5-10 years, and so on. So those are kind of like four reasons, I think. We're going to talk about here now just a couple tips. These are really high level things. These are just great things to jot down if you're sort of wanting to remember at the end of the presentation. And so the really big one is be curious. Ask questions. Very few questions are stupid questions. If you're in a board meeting and you have less experience, be forthcoming with that. Hopefully your board is supportive, interested in your development. So kind of related to that one is I like to consider myself a detective when I'm looking at financial statements. I want you to interrogate them. Don't just assume that everything is the way it's sort of shown to be, but really think it through. Excuse me. And third point on a sort of different tact is think about the audience for the statements. Who's reading them? Is it for funders? Is it for donors? Is it internal? Is it just for your own budgeting? That audience is very important. And then sometimes I like to sort of ask this question. So at the end of your board meeting, if you've been reviewing statements, see if you can explain in just a couple sentences, like what story are the statements telling? That story can be super simple. It can be, this year we invested in our capacity and we ran a $5,000 deficit to improve X, Y, and Z, right? Like that is a great story. Another one can be, this year we increased our fundraising and showed a surplus with the intent of hiring a staff, et cetera, right? We can go on and on. But that, when I say story, that's kind of what I mean, right? Like it's highlighting any of these irregularities and giving an explanation. So, financial statements, what are they? What do they consist of? Usually 2 parts, profit and loss, balance sheet, right? Again, I'll try to go through these parts quickly because we are going to be able to return to them. And if you want us to go deeper into anything, we can. But again, I want everyone to just understand the same sort of vocabulary. So starting with the profit and loss, I pulled a definition from Investopedia. It says summarizes, the profit and loss report summarizes the revenues, costs, expenses, and believe it or not, profits/losses of a company during a specified period. So in this case, the emphasis is mine. I have bolded the word specified period because that is really one of the key things that differentiates a profit and loss from a balance sheet. So my note to this is, I think this is the report most people understand intuitively. It resembles your budget, which is, I think, a document, in my experience, that my clients tend to be a lot more comfortable with. They're more comfortable making budgets than they are sort of reading the profit and loss or the balance sheet, the financial statements. So sometimes thinking of it that way can be helpful. So a couple key notes is you want to always pay attention to the dates, right? Make sure that the profit and loss report are for the dates that you're interested in, you know, this year, last year. It sounds simple, but that's an easy thing to overlook. And then another note about the profit and loss is that it's going to reset each fiscal, right? It's just showing you the data for a specific period. So next period, next year, next quarter, whatever, that information is going to essentially sort of reset. And we'll talk a little bit more about why that matters. So the profit and loss has three main parts. This is sort of the anatomy of the profit and loss, and we will have an image coming up a little bit later. But it's going to show you your income, your expenses, and then your profit slash loss. Sometimes people get confused about the profit slash loss part. That just means it's either a profit or a loss. You either made money or you lost money. That's all. So your income is your revenues. Pretty easy. I think a lot of us are pretty comfortable with that. We love to fundraise, we love to make money. Expense, your costs, also fairly straightforward. What did you spend? You look at your bank account, your credit cards, things like that. And the profit slash loss is the difference. It's the net result. So you add up all your income, add up all your expenses, subtract the expenses from the income, and you either have a positive number, which is a profit, or a negative number, which is a loss. All right, that brings us over to the balance sheet. So the Harvard Business School defines the balance sheet as a balance sheet is a financial document designed to communicate exactly how much a company or organization is worth. There's lots of different definitions, but I think this one was a concise one. How I like to think of it and how I like to explain it to clients, to colleagues, community members, is what do you own and what do you owe? That really is what the balance sheet is showing. It's not how much money you spent, and it's not about your revenues and your expenses. It's what do you own and what do you owe? That's really, I think, a simple way to think of the balance sheet. So what are the different parts of the balance sheet? Well, the assets are what you own. The liabilities are what you owe. Pretty simple so far. And then very similar to the profit and loss, the equity, which is sometimes an area that people find a little harder to understand. That's really just the difference between what you own and what you owe. It can go under a lot of different names. A lot of things can go into your equity accounts. Excuse me. And that's a little bit more, I guess, complicated sometimes. But really, if you're ever trying to figure out what that line is in the equity, it's always going to be some sort of difference between what you own and what you owe. So that really is a high-level overview of what I would call the anatomy of the financial statements. Those are the big categories, right? As long as we know all those words and we know kind of what they mean generally, we're actually well on our way to understanding the financial statements. And then what I wanted to provide you with you next is, here are some questions to ask. So you're comfortable, hopefully now, with the basics. What do we do with that information? Well, one of the first questions that's good to ask is, are these statements prepared using accounting software? So this slide is just a summary. I'm going to leave this slide. For anyone who's trying to write these down, don't worry. We will return to these questions at the end with some more notes on them. We're going to go through them all one by one. So, are the statements prepared using accounting software? This is important because accounting software is much less prone to human error. I really think that's all it comes down to. It can be intimidating for some, but with very basic instruction, or You work with Greenbooks, who offer subsidized and in some cases free or pro bono, bookkeeping services for very small shops. We will have the accounting software and we can help with that. But the big thing is that if you're using things like Excel, there's a much higher risk of there just being mistakes, slips of the fingers, typographical errors, transposition errors, those kinds of things. So it's not to say that Excel is bad. Obviously, I have a preference. I think that the softwares are, they exist for a reason, and it's a good reason. But as a board member, I think what you just want to know is, are these statements using an accounting software or not? Because that's going to just kind of help you interpret them and understand them a little bit. It's going to give you some ideas about how reliable they are. So here are examples of what the financial statements could look like. I know it's going to be small. The point here isn't that I don't want to go through line by line, but this is what QuickBooks reports will look like. So if it doesn't look like this, or it doesn't have this kind of flavor to it where it looks quite, organized and everything has a name and, it looks kind of handmade, if you will, that's just going to be a little bit of a flag in my mind that I'm going to keep that in mind. Now, something else that's important to think about when you're looking at your financial statements is that it's very hard to understand what's actually going on if you only look at one set of statements. When we're, especially as board members, asking questions about statements, generally what we're looking for are patterns. We want to look at sort of year over year over year. And I think this is one of the greatest tools that I can leave you with, is that when you're getting statements, you want to know to ask for a prior year comparison. Having that column that shows last year and this year really makes a big difference. Because you don't necessarily know the day-to-day of what's going on at the organization. Some of you might be staff or executive directors, or you're a working board that's much more involved. But my point is that you don't need to know the day-to-day in order to assess the financial statements. What you do need, though, is prior year data in order to show the pattern. So on the next slide, I have the same statements, but they're showing the prior year. Right, so you can see I just add that column. And immediately I know some of your reactions might be like, all of a sudden these look a lot busier, and there's sort of a lot more questions you might be having. But rest assured, having that extra data is actually going to make your life easier. It's not meant to overwhelm you or make it more complicated. Having that prior year comparison, either last quarter, last year, 2 years back, that gives you the history, that gives you the context to understand what's going on. So we can come back to these if people have sort of specific questions. This is just a sample, though, just to give you an idea of what professional statements can look like, and to show you that second column. So question number 2, why are these amounts negative? That's just a great question to ask. It doesn't mean there's anything wrong. What you're looking for, though, is unexplained negative numbers are usually a good place to dig a little deeper. So especially on the profit and loss, it's I'd say quite rare to have a lot of negative numbers on there. Generally, they're going to show as you earn money, the numbers go up. As you spend money, the numbers go up. If you have a big negative number on your profit and loss, it might indicate that there's been a bookkeeping error. But really anywhere you see large negative numbers, really, I guess, even small ones, that just could be a good place to ask a question. Again, doesn't mean it's good or bad necessarily, but it's just something to look at. It's one of those first checks you're going to want to do every time you're looking at statements. So the next question, this is for those who are executive directors and staff and people who are familiar with the budget. This one will be an easy one. But if you're not, if you're one of those board members who focuses on other aspects, this is a great question that you can ask. You can say, does the net income match our expectations or our budget? So this is a great question to ask because it gives you, it sort of invites those who do know more or who are more familiar with some of those things to come forward and sort of explain, oh yeah, that's what we expected. We hired that extra staff and we spent some more money and we budgeted for that. And yeah, we're showing our deficit or whatever, or, if it's the other case where, no, weird, I thought we were supposed to make money this year. Why is it showing negatives? Well, again, maybe there's an error in the bookkeeping, or somebody has some information that they want to share. So that's just another great question. Okay, moving on, we're almost done. So the fourth question would be, do the bank balances match? So what you're looking at here is you're really asking the question, are the bank balances, this would be on the balance sheet, under the assets section, are the bank balances that are being shown in our software or in our spreadsheet, do they make sense based on what our actual bank account says? Do the numbers match exactly? If they don't match exactly, do we know why? There could be good reasons for it. There could be checks, for example, that have been written but never cashed, things like that. Like again, none of these questions are meant to be yes, no, yes means good, no means bad. They're meant to be probing questions. You're interrogating the statements. You're trying to get a little deeper. So do they match? If yes, then that probably means the bank reconciliation is complete and it's correct. If they don't, you're not confident for sure whether those two things are true. And then coming back to those two columns, I think the next sort of the final big question that would be great to ask is, are there huge changes between years? Now, I know some of you might be thinking, well, Erik, how do I know what's a huge change? Well, it's relative to your organization. There's different tests that accountants can apply to sort of ask that question of what counts as a big change. Generally, for you, I would say if it's a significant percentage of your annual revenue, then that's probably going to be a big change. So we're sort of talking about, like, if you want a number, I can throw a number out there, sort of 3% to up to 5% changes in your annual revenue would be things that you might want to have an explanation for why, or ask a question. So if your annual revenue, is $100,000, any variances that are under 3% of 100,000 probably are just normal operations. But if, as they get bigger, and that number can change depending on who you ask. But between years, you're kind of looking for any big changes and whether you can explain them. So I think our next slide will give us a bit of a summary. Yeah, so here is a summary slide as well. I think we can leave this one up for the moment for anyone who wants, who either missed anything or as a useful reference. I've added a couple extra notes there. So I'll sort of pause there because that's kind of the key presentation and information. I hope that was helpful, and I hope that wasn't a too basic for some of you or maybe too fast for others. So hopefully I struck the balance.
Thank you so much, Erik. I really appreciate the thought and effort that you put into just preparing some basic things that people might want to be thinking about when it comes to their finances and making sure everybody is on the same page. So now we're going to take the next half an hour and go into depth a little bit more on some of these topics that Erik has presented, and we're going to share some ideas together, and we're also going to answer your questions out there. So I want to encourage you to put some questions in the Q&A, and we're going to come through and look at those. And Emily, I see your question out there. We're going to have a quick conversation about budgets in a few minutes as well, so I'm going to hold that one for the moment, but encourage you others to also add in their questions. So let's go back to the beginning of, Erik, your presentation and talk a little bit more about the why bother question. You shared some great ideas and about why it matters. And I guess I just want to know, like, do you have some examples of organizations where, maybe not specific organizations, but, examples where you've been on boards and what have you noticed out there in terms of the money side of an organization? Are things Are things, are people generally getting the sense that they understand it, or are they kind of, hoping for one person on their board who does and everyone else just doesn't pay attention? Like, what are your reflections on that?
Yeah, it's a great question. And I'm gonna just stop sharing here while we chat, and then if anyone wants, we can pull up a slide. Yeah, I find that I think one of the more common things is that people on boards kind of tend to gravitate towards their comfort zones. And so if everyone's comfortable with the finances, that is reading the financial statements, I feel like you get really good conversation. And it usually works totally fine. But the more challenging situation, of course, is when there's like that accountant is always the classic example, or the treasurer who everyone sort of just expects them to be able to prepare the statements, interpret them, explain things, highlight everything. And it's sort of unfortunate, but like the better the job that person can do, sometimes it does incentivize people to kind of let them handle it. And that does everyone a bit of a disservice, because no matter what area of responsibility you have, even if you're just sort of a member at large, we mentioned that fiduciary responsibility. Everyone still has a role to play and responsibility in understanding what's actually going on. And, I didn't mention it, but of course, it's not just that the financial statements can help us do better, but also, right, like fraud does happen. It exists. Like, we're all needing to want to make sure that everything is accurate. We're holding this money in trust for the community, for our beneficiaries, the people for whom we've created this nonprofit, or whatever it is we're doing. So I like to think about that. It's sort of like we have a duty to those people, to our community, to be looking at these things. So hopefully that's kind of why I framed the presentation in like, here are just 5 questions you can ask. I think if everybody asked those 5 questions at any board meeting where statements are being reviewed, I think you'd uncover a lot of question marks. Like, I really think that would be a great start. It's not exhaustive, but it will get you going in the right direction. And then you'll probably be able from there to just, using your own intuition, sort of ask follow-up questions, things like that.
Absolutely. Thanks, Erik. That's some great thoughts on that. And I think, yeah, I've been to too many meetings where everybody is just assuming that whoever the financial person is, whether it's a treasurer or whether it's just the executive director, or whether it's, a board member who's really financially savvy, that as long as they understand it, then then it doesn't matter if anybody else in the room does. So I don't think it matters if you're a board member or if you're a staff member. I think that having a knowledge on how to look at the financials and understand them is really going to help the organization, because the more people who know what's going on and how to read it, the better it is for everybody. I'm going to jump into a couple of these questions here that we can answer and cover, and then we're going to come back to talking about each of the statements, that section that you covered around that. So the first one that I'm going to cover is from Carmen. Carmen talks about planning to step into the role of treasurer for their nonprofit, and they're curious about what other resources. So the idea of everything's in columns, but this person likes infographics and where you can see a pie chart. Is that wrong, or is there an unseen danger I don't see? And so, Erik, do you want to answer that question?
Yeah, absolutely. Well, first, thanks, Carmen. Nice, hello. Thanks for your question. I think that's great, right? Like, different kinds of learners, different ways to present the data. I guess to your sort of concern, you mentioned you're going to provide both. I think that's perfect. I think the only danger could potentially be if you're taking statements prepared by your bookkeeper using an accounting software, and then you're turning that into a pie chart, and all you give somebody is the pie chart. Obviously, maybe there's 2 unseen dangers there. Is one is the data still accurate? A slip of the finger, moving, adding a 0, whatever. And then 2, it puts a huge burden on you to make sure your pie chart is detailed and accurate, and not to doubt that anyone's pie chart will be complete. But we've designed financial statements in a particular way for a reason, and as much as you know, the columns of data, columns of numbers kind of make maybe some people's eyes, some people's eyes just cross, when they try to read it. It is, I believe, like a good way to present the information. So I think, yeah, as long as you're doing both, I think that's wonderful. Adding any kind of additional graphics, additional notes, additional comments are definitely welcome. And by no means do you need to give somebody, like what I just showed everyone, a report with a bunch of columns and just say, figure it out, right? Like one of the goals of the treasurer is to help facilitate the discussion around that, not to just put the onus on the others.
Yeah, my comment, I'm just going to add a few thoughts here because I've been to a lot of meetings where we talked about money. And one of the things I worry about sometimes is presenting too much information and sometimes too little information. So I'm thinking about, for example, you gave a few visuals there of the profit and loss, comparing it to previous year, and that was fine. It had two different columns in it, one for the current year to date and one for the previous year. Now, I've also seen a lot of folks present those financials which include things like showing the percentage of difference, showing the amount of the difference, and it just starts to become so many columns that the minute someone sees it, they just kind of their eyes glaze over and they're not interested in looking anymore. So my advice would be to be careful how much financial information you put in front of people, because it can be too overwhelming and people just shut down. So yes, having things presented where you might have a pie chart and then you also have the numbers and columns can be a great way for different visual learners, right? People who want to look at it one way and people who want to look at it other. And at the same time, you want to be careful that you don't have too much information, too many pages, because then people will just shut down if they see it's like, okay, here's 6 pages about the finances. We're presenting everything in so many different ways you might want to see it. Well, there's got to be a balance. So I think that goes without saying a little bit, but it is tricky because I went to a meeting a few weeks ago where the amount of financial pages was like 7 pages and I understood them all. But I think like, gee, this could have been presented in a way that wasn't so overwhelming because anybody at that meeting who doesn't understand finances is going to stop looking after the first page. So I think the idea of having columns and all the numbers there in front of you, it works for people who know how to read those columns. And hopefully everyone after today's session is going to know a little bit more about how to do that. And the pie charts are a different way to present it that can be helpful. I would just encourage everyone to be careful not to have too many ways of presenting because that'll also, shut people down. And lastly, I would just say, if you're asking your bookkeeper to do more, you also want to be careful with that. That's the only other downside it might be. If you're going to prepare them yourself, that's one thing. But if you're going to start adding in a number of additional reports you're expecting someone else to do, I would definitely suggest, talking that through to make sure it's reasonable based on time. Anything you want to add on to that, Erik?
I think that's a great point. I wish I'd said it. No, I think that's awesome. Definitely overwhelming people is real. And I think maybe the only small thing I would add is like, feel free. I think it was Carmen, right? Like feel free to talk to the board about it, get feedback, just ask, do people, oh, is this too much? Is this too little? I think you can achieve what Kristina is saying by just kind of creating that culture of talking about it openly. I think that helps too.
And the other thing is, I would say to ensure that you have consistency over time. So if you're going to present things a certain way, then try to do that the same way every time. Now, the difference would be your annual general meeting, because your AGM, you're probably going to present the financials in a much more formal way. They're going to look slightly different than the reports that Erik was showing today, because they'll probably have, notes to the financial statements and additional pages and columns, and that's fine. But if you're going to present them at board meetings on a consistent basis, I would just be careful about presenting too many different things each time, because then people can't get into the routine of what to expect. So if you're going to do a pie chart, decide on it. Is that going to be something you're going to present at the annual meeting? And frankly, a lot of annual reports will have a pie chart showing the revenue and expenses as part of the annual report as a section in there. And so is that where you're thinking of presenting it, or are you thinking of doing this on a monthly or quarterly basis at the board meeting? And all I would say is just try to be consistent about what you're presenting so that people know what to expect, they get used to it, and then they get better and they feel confident because they're doing the same thing over and over again. Okay, so speaking about notes to financial statements, we're going to go to Megan's question here, talking about how to share advice, so sort of sharing some advice on how to structure notes to complement the information in financial statements. And I will just say that there is a difference between sort of internal notes that you might prepare internally to present as you're going through the quarterly or monthly board meeting financial report, and the difference between, like I said, those formal statements you might present at the AGM that look back on the whole year and have what they call official notes to the financial statement. So those are two different things. I think you're talking about the first one, but Erik, I just want to give you a chance to reflect on this question about notes to financial statements.
Yeah, thanks again for the question, Megan, and yeah, you're welcome for the time. It's my pleasure. It's a fun topic. So to build on what Kristina was saying, I think the key thing I'll highlight here is that you're saying that it's difficult to provide notes for both those with a deep understanding of accounting on the one hand, and those at the table with other strengths, for whom this might be an area of growth or a new area. I would say, like, what my process is once I have the statements, if I'm making them myself or working with a bookkeeper or accountant to get them, is before I go to talk to anyone about them, I would go through them myself, or with another board member. Like, you don't have to do it alone, and I would answer all of those sort of 5 questions that I just provided to you, and then any additional ones that you think things just jump out to you when you're reading them. The more you review your statements, the more you'll kind of know, oh, that's a bit odd, or why is that there? And being able to just anticipate those things. And I don't tend to add a bunch of notes to the actual document, because I think, Megan, you do get into that challenge there, where you're trying to think about who's my audience for this, and you have two different audiences. So when we're doing an internal process and we're talking about our statements, with the board, I'm going to have those notes separately. They're more like my personal meeting notes, and then I can kind of anticipate and explain and adapt the language to the specific person asking the question. I don't know if that answers your question, or if there's sort of an expectation to have notes on the actual document. If there are, I would just lean towards kind of what Kristina said earlier, of not wanting to put too much information, generally being succinct and just flagging any kind of major notes that you think would be appropriate. But for the most part, I'm going to hold those on my kind of notes and talk about them verbally, because there's no requirement to put that on the document itself.
Yeah, I would agree with Erik and say that those are probably more internal notes that you want to keep for yourself. And frankly, what I would include in my notes would be the answers to some of these key questions, almost anticipating what they are. And in particular, what I like to highlight at a meeting is, what are the big differences they're seeing, and what are the differences as they compare to the budget, or what your expectation was. So what I mean by that is, if your donations are really low for some reason, or if they're really high for some reason, then that's the kind of note you want to share. Like, just, flagging for everybody on the board that the reason why the donation number is much higher this month is because we received a really large bequest and everyone's excited. Or it's really low because we're finding that our last 2 campaigns, we've not had the response we expected for the donation. Same kind of thing. Like, you'll notice compared to last time that the government grants number has almost doubled. Well, it's because our Canada Summer Jobs grant came in, and we're now expecting to have funding for summer students. So giving that little bit of flavor in the verbal report. And I would suggest you don't go line by line through every single item, that you instead focus on those highlights. And so what I normally do is, I would say, looking at the profit and loss first, and sort of share, here's where we're at for our income for the year so far. We're at 100,000 and we're halfway through the year. Our goal is to get to 200,000. So we're well on track. As you can see, we've brought in some donation money. We've brought in some government grants, but you'll notice the foundation line is really low. And that's an area where we're struggling with and we're trying to pick up. So that kind of color commentary to sort of clarify where there's changes. And the same goes for expenses. Like, for example, if you notice the insurance number is getting really close to the budget line and you think it might even go over, because frankly, everybody around the country seems to be complaining that insurance costs are going up like crazy for their nonprofit. So that might be something you want to flag and say, have a look at the administrative cost of the organization. You'll notice the insurance number is quite high. It's getting close to our budgeted item, and we need to keep in mind that this might go over our budget, in which case that's the moment where the board should be talking about it. Do you want to add anything there, Erik, before I jump into budgets?
I did, but I should have written it down. I was like, oh, that's a good point, Kristina. Yeah, definitely. And then it escaped me. So I'll let me just.
No worries, jump back in if it comes up.
I'll just jump back in if I remember. Apologies.
So that was kind of my segue to go to the next topic around budgets. And we didn't cover the topic of budgets in the presentation today in the formal PowerPoint, but I did want to touch on it because it is a financial piece in our toolbox when we're looking at nonprofits and how to deal with them, with the finances. So Erik, do you mind just giving a quick couple minutes? Okay, go back to you. And
I remember.
Okay, go ahead.
I will do what you, yeah, I'll answer your other question in a moment. What I was just going to say is to I believe it was Megan's question. When I mentioned at the beginning, what's the story of the financial statements? What Kristina just did in talking through a couple of those highlight areas is another great example of what I mean by the story. And so sometimes when you're thinking about what are the notes, take some time and try to write down or say out loud a couple of different versions of that story, maybe some with the more, technical language, some with a little bit more of a high level, and see that could help you maybe come up with the best way to present it to, everyone as a whole. So you can just use that kind of, that sort of question, like, what story are these statements trying to tell? That can maybe be a helpful prompt for you to figure out what notes do belong there and what notes don't.
Great. And so let's jump into the question of what is the budget? What's it used for? Why do we need one? And can you just talk a little bit through some of those basic thoughts around budgets there?
Yeah, definitely. So yeah, generally our financial statements are going to be our kind of core data that we need to create our budget. A lot of folks sometimes come to us being Greenbooks, and they say, we're having trouble with budgeting. How do we figure out how much to spend on certain things? How do we track? They have all of these kinds of complicated or they seem really complicated questions about budgeting. And when we then talk to them a little bit about it, what we learned sometimes, or it's almost always the case, that they're not doing monthly bookkeeping, or they're not doing it very accurately. And our response normally is, well, of course you're going to struggle to know how much you should spend in the future if you have no idea what you've spent in the past. So if that's kind of why I like to focus on the financial statements as step one. But let's assume that you're regularly updating them, you're meeting with your board, you're able to talk through them a little bit. Really, the budget just comes, it's sort of a direct evolution of your profit and loss, with the added layer of well, what do we want to do different next year, right? So the profit and loss is going to be your baseline. It's going to be say, okay, well, how much did we spend last year on salaries? How much did we spend last year on whatever, right? Administration, every single line item that's important. That's your starting point. Same thing on revenues. Well, how much did we raise last year? You want to raise 20 grand this year? Well, we only did 7 last year. What would we need to do to more than double that amount? You take all of those numbers and you have to trust them and rely on them. You have to believe that they're accurate. And then you can actually budget meaningfully. As for making major changes, you're well, this year we did this, but we want to do this whole new thing next year. How do we know how much to spend on that? That is another, that there's no real way to look at the financial statements to know what the future will hold. So if you are going to sort of go down a new endeavor, like if you're a farmer's market and you're going to create a new online market, with that, you just kind of need to proceed conservatively and sort of hope for the best, that you can kind of estimate the cost as much as possible. But generally speaking, though, you'll have the data from last year and you just build your current budget off of this year. And I find that sometimes, it sounds so simple, right? It's like, just look at your books, look at it here. But it does involve everyone to pitch in, everyone to share their thoughts on how the year will look based on their experience. Sometimes the treasurer is a newer person on the board and the president's the one who's been around for like 10 years. So getting their experience and their input on the budget can be really, really helpful. But I feel that when you have solid statements, solid just meaning reliable, the budgeting process tends to follow quite naturally from that. I don't know if there's things you'd add. I mean, things change though, right? Like you're trying to predict the future with the budget. So give yourself, a bit of slack, I guess, in a way, because there are going to be things you can't predict. Pandemics, new government policies, different, your funder says no this year. Like there are these things for sure.
So the budget is an important tool because when you're looking at your financial statements, you want to compare it against what you planned for the year in your budget. So in addition to having a board look at the financial statements on a regular basis, the board should also be approving the budget once a year at the beginning of the year. In an ideal world, it should be done before the fiscal year starts, and a budget covers a fiscal year period. So if you're going under a calendar year or a March 31st year end, your budget's going to cover that same period, so that when you're looking at your financial statements, you can compare it against the budget. And if you have an item that's going way over what you expected, that's when you should be coming back to the board and asking for an adjustment to your budget, because you're realizing that there's something that didn't meet your original expectations or plans. And that's okay. That happens all the time. It's just that you want to go into that with the knowledge that it should happen. So just a reminder that in addition to looking at those financial statements on a regular basis, you should be taking a look at your budget at the beginning of the year, and then also comparing it throughout the year to make sure you're sort of on track for what you expected. Erik, I just want to go to this question that relates to budgets by Emily. I want you to have a read through, because I'm not 100% sure I fully understand the question, but it talks about struggling with the percentage of the budget, and it says that it reflects the percentage of that line item in the budget, but what I want to know is how to translate that to informed decisions. So do you have any thoughts on that question?
Yeah, I think I understood it. Of course, Emily, you can ask a follow-up question. Although we'll try to be brief because we're running low on time. My interpretation of that question is maybe there's two. The one is that I did say in the presentation, one of the questions to ask is, are there big changes from one year to the next? And I said, well, how do you know what is considered big for your organization? It's relative to your size. And I gave a number of, it's a percentage, if it's like 2 to 3% of your annual revenue, that would be considered a big change. So just really quickly, I know it's hard to sometimes do this math verbally, but if you had a $100,000 a year annual revenue, 3% of that, right? $3,000. And so any change from year to year that is more than $3,000. So this year we only raised 15,000 of donations, whereas last year we raised $10,000. So that's a $5,000 difference from year to year, which is more than your sort of 3% threshold. So we would say that's anything in that, around that ballpark, is going to be a material difference from year to year. So really that's it. So you're looking at a percentage of what your usual annual revenue is, and then that gives you a kind of meaningful way to give the context. If you're off by like $500 and you have $1 million a year, like who cares? But if you're $10,000 a year and you're off by $300, $500, like that's actually a pretty big chunk, relatively speaking. So hopefully, Emily, that's kind of what if that's the math that you're wondering about, then the second half of your question is, how do I inform decisions? Well, if you are seeing that there are these areas where there are these big changes from year to year, then you want to ask the question, okay, well, why is that? And if it's a problem, like we used to be making more money, now we don't have any money, then that hopefully it's clear to you how to make some decisions. You need to say, well, we need to up our fundraising, or we need to reduce our expenses, or, hopefully that breaks it down to say, okay, this is the area we need to focus on. It's not just the whole statement, but it's this line item is where the big change was, and that maybe gives you a direction to inform your decision.
Great. Thanks so much, Erik. And then we have time for one last topic, which is around cash flow. So one of the comments here is financial statements are one thing, but isn't cash flow the biggest issue impacting an organization? So Erik, do you want to reflect on that a little bit?
Yeah, I think that's a great question. I don't know if probably. I think, yeah, cash flow probably is the biggest issue. In my experience, cash flow tends to be more of a problem for the bigger organizations, ironically. Well, and the very smallest. There's sort of like this sweet middle spot where you are simple enough that everyone kind of, everything kind of comes in pretty regularly. You sort of don't overextend yourself. You're not terribly ambitious. You kind of, it sounds like a bad thing. I just mean you're stable, you're solid, right? Those organizations I find tend not to necessarily struggle as much with the cash flow. I find that it's the really small shops that have no money to put forward. They have cash flow problems because they're like, we can't even hire staff because we don't have the grants, and we can't write grants because we don't have staff, and they're just caught in that cycle. I feel like cash flow is a huge challenge for those individuals, and part of what Greenbooks does and some other groups is help people break out of that cycle. That's sort of why we exist. And then on the other side, I think cash flow becomes really challenging for those like medium to larger organizations, or like $1 million and beyond, where, it's complex. There's a lot more going on, big chunks of money. Your payroll's like 30 grand every 2 weeks, grants are in the millions and they're coming in at odd times. Like that's really when the cash flow analysis becomes critical, because it's possible that, right, you can't make payroll, even though your financial statements are showing you're flush, right? And you're making millions in federal grants and fundraising and all this kind of stuff, but you can't do the payroll just because, it hasn't been deposited yet and those kinds of things. So I definitely think cash flow is really important for a lot of organizations for those reasons. And truthfully, it's a bit of a more nuanced and complex statement to walk through in a presentation like that. I kind of left it off because in my experience, that's kind of a level 2. That's like a 201 sort of conversation in some ways.
Yeah, I would say it's very important. Cash flow is very important. And another thing that all nonprofits should be striving to do is create a bit of a buffer for themselves so they can use it as a cash flow, within their equity as an organization. So they have a little bit of a buffer to operate, because it's often the case that grants come in after the fact, or things are reimbursed. So those can be challenges. I missed a question from Jim, so I'm just going to, Erik, ask you your thoughts on whether financial statements should be sent out before the meeting so people can think of questions, and what you think is a healthy. I know Hannah did answer it in the chat, but I wanted to give you a chance to respond as well.
Yeah, I think 1 week's great. It really does feel like it depends. Obviously, dropping it on people the day of sucks. Like, people don't have a chance to review it. But if your culture is such that, like, for a fact nobody's reading it until the day of, like, maybe that's useful information to keep in mind as you're trying to make that decision. I say a week is perfect. I like to err on the side of that. At least a couple days, I think, is really like the bare minimum. But I would say, like Jim, like that's a conversation to have at the board level, right? It's about expectations and trust between you and the other board members. I don't think there's a hard and fast rule. Like, the more complex they are, the more time people need. But it comes down to the engagement of the board and what kind of expectations you have. And if the one thing I would say is, like Kristina said, be consistent. If everyone wants them 3 days in advance, and you for a week and you're giving them the day of, that doesn't exactly build the trust between everyone that you're hoping to do. So I think find a rhythm that works. It also depends on when your meetings are. when your bank statements and credit card statements are available, when the bookkeeper can find time to update the finances. Some of those factors impact how fast you can get things out. So
yeah, and I think it also depends on how frequently you're meeting. Like if you're meeting
yeah,
monthly, then you might not be able to send them quite as
yeah.
far ahead. But if you're meeting quarterly, then I would suggest people should even have a couple weeks ahead of time to be able to check it out. So anyway, thank you everybody for your questions and for being here today. Erik's put a link in the chat there to Greenbooks. You should also check out Sustainable Capacity Solutions for the other resources and tools that we offer. The understanding the financial side of an organization is very critical to running a nonprofit. So we just encourage you to continue to advance your knowledge in that. And there's other webinars that we've actually put on in the past that are on the same topic. And as Erik says, it can also be a lot of fun. So any final thoughts, Erik, to send people on their way?
Just that. I wanted to say that like the financial side of it is exciting. It's fun. It's like where a lot of cool things can happen and where you can feel really empowered to make a huge change in your work. And I just say, don't be afraid of it. You know, like hopefully this made it seem simpler. If this made it feel like, it's even more than I feared. Like just trust us that like as you push through, it will become fun. It will become empowering. It'll help you feel that you can really make a difference in the world. And I think that's kind of why we're here. So
thank you so much, Erik, for being here. And thank you everyone for your participation. We'll see you next month. Take care, everybody.